Okay, so I want to continue on talking, we're on page 4, about the documents that I want you to put together for your project. And we talked about some of these already, but I want to continue on to make sure that you understand what all I'm looking for with your project. So again, if you're doing an LLC, which is, most of the time it's what most people use nowadays, I want you to do these documents here. If you're going to be doing a corporation, I want you to do the documents here. And as you can see, with a corporation, there are more of them than an LLC. And if you're going to do a partnership, I want you to do these. Most people don't do partnerships anymore, so I want to focus more on the LLC and the corporation. Now, last time we talked about filing with the Secretary of State, the articles of organization for an LLC, and articles of incorporation for if you're going to do a corporation. And so I do want you to do that form and make sure you fill it all out and include it as an attachment to your project. Those forms are in my book, or you can go online like I showed you last time and fill them out online and print them out. Whatever you want to do is up to you. So the operating agreement, we talked about this briefly. If you're going to be an LLC, you're going to need to have an operating agreement. An operating agreement is the foundational document for a limited liability company. They're like bylaws for a corporation. Now, if you're an LLC, the way you set up your operating agreement will depend on if you're going to be one person, a single member LLC, one person, or if you're going to have more than one owner, a multi-member LLC, it's a different type of form. I have both versions in my book here. So on page 37, did we look at this already? I don't remember. I don't think we did we? No, okay. So page 37, let me just show you. Okay, so page 37, this is an operating agreement, if you look on the bottom, for a single member LLC. A single member LLC is a one-person LLC. It is a very simple form of business structure. It has a lot of advantages to it over a sole proprietorship. Sole proprietorship, of course, is one person doing business on their own. But the problem with the sole proprietorship, as we've already discussed, you have no liability coverage. There's no barrier that separates your personal assets from business activity. And that's where a single member LLC is really a great way of doing business for people, because you can have that liability protection that is created by the limited liability company, but it's still a very simple way to get set up without having a lot of the technicalities and expenses of doing a corporation. And it's a very popular form of business for a one-person organization. And essentially, it's a sole proprietorship, only you have liability protection. That's basically the idea. Now, with a single member LLC, one-person LLC, if you want to, you don't have to get your own separate tax identification number. We talked about that last time. An employer identification number, tax identification number, same thing. That's like the social security number for a business. That's the number you use when you open a bank account, when you fill out your payroll and all your tax forms. For a single member LLC, you have an option. You can either use your social security number or your personal tax ID number if you don't have a social security number, or you can get a separate tax ID number for the LLC. It's up to you. If you do that, however, I recommend you still get a separate tax ID number, because you don't want your social security number floating around out there. So, but in theory, you can use your social security number. The other thing about a single member LLC is it is a pass-through to the owner. So if you're an individual person, you file your taxes on your personal tax return, your 1040. So you don't necessarily have to file a separate tax return for the LLC. That's another advantage of a single member LLC is it cuts down on paying an accountant to do a tax return for you. You can do it as part of your individual return, and there's some benefits there as well. Now, I'm not going to get into all the intricacies of that in this class, but I just want you to be aware it's a very simple form of business. You file with the Secretary of State, you get a tax identification number, and then you do the single member operating agreement, and then if you're going to have employees, you got to get a state number, which I'll get to in a minute. So this is the form that you would use. Now, there's another use for single member LLCs. That's a little bit more technical, but this is a real common thing. And let me just kind of explain what I'm talking about. So let's say I'm a corporation, and it doesn't matter if I'm an S corporation or if I'm a C corporation. Or, for that matter, I could be an LLC. It doesn't really matter. But let's say in my business activity, let's say I'm going to be a restaurant, and I'm going to have multiple store locations. And I want to have each separate store location be a self-standing business unit, a subsidiary. So what I can do, so let's say I'm going to have 4 store locations. So what I can do, so if I'm a corporation, S Corp, C Corp, or even another LLC, it doesn't really matter, I'm going to call that the parent company. That's my primary company. That's where I file my taxes, through this company. So a single member LLC can also be owned by another entity, not necessarily an individual. So if I have my primary parent corporation, I do restaurants, so maybe I have a Monmouth, Corvallis, a Salem, and a Eugene restaurant. I can separately organize each of those as a separate standalone LLC, all tied back to my parent company. And I only have to file one tax return. I can have separate bank accounts for each separate LLC. I use the tax ID number for the parent corporation for all these separate LLCs. This is a really common way of setting up multiple locations without getting into the complexity of having a whole bunch of corporations flying around and everything else. I have a client, I'll just give you an example. She inherited about 10 separate apartment complexes all throughout Southern California. Some of them are worth, like one apartment complex is worth like $20 million, one's worth like $5 million, they're worth 10 or 12 million, so whatever. So she sets up a corporation that's actually in Nevada, because they don't have income tax. That's her primary corporation, it's an S Corp in Nevada. And then each of her separate buildings is a separate LLC. And what she has names for them, like, Park Rose Apartments, LLC. 123 Seneca Boulevard, LLC, for that different apartment building. Now, why do you do that? Well, she maintains separate checking account for each LLC. She has separate payroll for each LLC. And what that does is it creates, where's my highlighter? It creates a liability compartmentalization. And what I mean by that is if something bad happens at this apartment building and they get sued, it shields the other apartment buildings from that potential liability. And so it's a way to compartmentalize liability, bookkeeping, payroll, and those sorts of activities into each separate LLC. So these are all single member LLCs owned by the corporation. And that's a really common way of structuring when you have assets that have sufficient value to them, such as an apartment building or farmland or store locations or restaurant locations, whatever. And you want to have these separate standing entities. And each LLC is a manager-managed LLC, which means that they have a separate manager for each apartment building, and they screen tenants and do all that kind of stuff. So from a organizational chart, this is how you can use LLCs as a really effective way to organize the structure of your business, compartmentalize liability, set up different management structures, separate checking accounts, and it works very, very well. Now the downside to this is you have to pay a separate annual renewal fee, which in California is like about $800 a year if I remember. Here in Oregon it's only $100. So there are additional costs by doing this, but at that level of asset value, that's a drop in the bucket. But if you're talking, each thing is it's only 10, 20,000 or whatever, it's not really cost effective to do that. But this is real common. You see this in all throughout business, at all levels of business, even publicly traded corporations. They do a lot of this. They may have trademarks which are held in different LLC. They may have, in the shipping industry, they may have each container ship be a separate LLC, or in the aircraft industry, each aircraft may be a different LLC. You get the idea. So that's a way of management style by compartmentalizing and using LLCs. Now there's another similar method, which I'll get to in a moment, where we use assumed business names to kind of accomplish the same thing, but I'll get to that in a moment. So with a single member LLC, it's considered a pass-through, so the profits flow up to either the individual human owner, or if it's an entity owner, they all pass up to the parent company, and that's where you would file your tax return, at that level. Now the form I have in here, this is not really designed to be the kind of compartmentalization LLC like I've shown you here. This is more, this form that I have put in this book, this is more the form you would use as an individual person when you're setting up your own individual business. So if you're going to do this kind of subsidiary thing, you'd have a slightly different way that you would structure the operating agreement form. And I don't want to get, that gets a little bit beyond scope of this class. All right, so just to kind of show you what an operating agreement does, it's got the basic information about the LLC, what the purpose is. This one was going to be for a restaurant bar, if I remember. So we have approval here to get Oregon Liquor Control Commission licensing, Department of Health licensing, or other licensing, insurance, and other type of requirements. And again, you would tailor make this for your own business, however you want. Now for this class, you don't have to do that, but in the real world, you'd want to tailor make it for your specific type of business. And again, I do have that form in a Word format. If you want to modify it yourself, you're welcome to. But you can just kind of pull this out of the page if you want. So where will the offices be? Who will be the registered agent? That can be you. You don't have to hire a company to do that. However, there are reasons why you may want to do that, so you don't have somebody show up in the middle of the night and serve you papers. But for the most part, most people are going to be their own registered agent. If you're doing business outside of Oregon, you may have to get a registered agent in that other state if you're not located there physically, because you do have to have a physical, actual, real-world address. You can't use a P.O. box. How long will the LLC last? Who are the members? If we want to add additional members, if you're a single member LLC, then you're going to have to, if you're going to add another owner, you're going to have to redo the form, because this only works for one person. And then here we go, tax ID number, banking authority, the authority to open a checking account. So over here on the next page, right here, section 1.11, S Corp election. Let me talk about that real quick. This is becoming very common. So one of the, I'm not sure the right word, strange, weird, odd, whatever you want to say, one of the things about an LLC is if you want to, you can elect to be treated as an S corporation for tax purposes. This is called an LLC, which elects S corporation status, or an LLC taxed as an S corp. And this is becoming a very common form of small business. And it's kind of weird if you think about why not just set up an S corporation to begin with? So you're an LLC, but you're going to pretend you're an S corporation. So the reason why that's done, number one, it's a little bit easier to set up an LLC, or you may already be an LLC and you want to turn into an S corp for tax savings. And there are some tax advantages for being treated as an S corporation rather than a single member LLC, because for one is Social Security tax, which is called self-employment tax. If you're an individual, single member LLC, you'll file a Schedule SE, which is self-employment income, and you have to pay 15.3% Social Security, Medicare, Medicaid tax on your earnings. With an S corp, you pay yourself a wage, and then if you have profit distributions after that, it's considered a dividend, and that's not subject to Social Security tax, so it can save you 15.3%. Now, it gets a little bit more detailed than this class allows for, but there are some tax benefits to being treated as an S corporation. And so this paragraph allows for, if you want to be an S corporation, even though you're an LLC, you can file, it's called a Form 2553, where is it, right there, with the IRS, and then you'll be treated as an S corporation. You will have to file a separate tax return, however, so that does add expense to doing that. But usually, if you're large enough, the tax savings will override that expense. Now, I'm not really going to test you on all that, but I just want you to be aware of that ability of an LLC to be treated as an S corporation, because it's becoming very popular. Now, whether or not, I have accountants that tell me they hate that, they don't like LLCs treated as S corps. And the IRS is kind of in the process of changing some rules there. So in my own practice, I typically recommend people, if you want to be an S corp, be an S corp, rather than an LLC treated as an S corp, just because the law is much clearer on S corporation law. LLC law is still sort of developing, and the IRS isn't always exactly sure how to treat LLCs. So I kind of like, if you're going to be an S corp, just be an S corp. It's not that much more expensive to set up, and then it's very clear what you are. Okay, so just some other information. The LLC operating agreement is going to talk about what the initial contribution was, money, real estate, intellectual property rights, whatever equipment, vehicles, that kind of thing. That establishes what's called your tax basis. That is how much investment you have in the LLC. That also establishes your depreciation schedules, and then if you're when you sell eventually, it'll establish what your capital gains are. So it's very important to keep track of what your both initial contribution is when you set up the LLC, and also if you're adding funds in the future. You want to make sure that you have an account in your QuickBooks to make sure that you have that owner's equity that reflects the money that you put in to the company. So obviously in an LLC it's only owned by one person. Income and loss will be allocated 100% to the owner. If this is a multi-member LLC, we're going to have similar language, and that's going to allocate based on percentage of ownership, or if there's some other way that you're allocating profits. So maybe, for example, you have an LLC, this is pretty common in construction, where you have one owner that's putting money in to buy the land and the building materials, and the other owner has their license to, a CCB license to build. And so essentially the profit allocation will first go to repay the owner that put money in to buy the land and building materials, and then after that they'll split profits equally or something like that. So that would be where you would detail that out in a multi-member LLC. Management authority, and again, for an individual, it's pretty straightforward. It gets a little bit more detailed when you have more than one person. And then other limitations on authority. And then it goes into bookkeeping, banking, what happens when you shut the LLC down, and that kind of thing. So it's pretty simple. Now the next page is where we have the multi-member, more than one owner, form of an operating agreement. And again, it's going to have the same kind of information, but now we've got more than one owner. And you also may have a manager, which is called a manager-managed LLC, like in an apartment building. So this type of an LLC operating agreement is going to be much more detailed because you now have multiple people involved, and one of the roles and functions of an operating agreement is to basically establish the ground rules of the business. And this is where you're going to want to input, very specific, tailor-made language to your individual type of business. If you're going to have a manager, you're going to want to detail out what authority the manager has in terms of being able to open a checking account, whether they can open credit card accounts, if the manager will have authority to do payroll, if the manager is going to have authority to get loans, to buy equipment, to buy real estate, to sell real estate or equipment, or any limitations that you might put. So that's all going to be detailed in this type of a document. So just to kind of look through it real quick, you see the same thing. Here's where we're going to have the percentages of the ownership, which also typically will be their voting rights. This one you can see they've got 89 versus 11%. But if you had 50-50 owners, that's where you just put the percentages. What their contributions were, you may have to attach a separate page for that if it's a detailed list, like equipment or something. Other business of owners, some LLCs will have a non-competition component so that the LLC members agree they won't compete with each other and open another competing business. Other LLCs, and for the most part, you have the ability to do other type of things and not solely the LLC. And again, you're going to have to tailor make this for each type of business. This will set forth whether you can admit additional members. If you do, what consents are required. This may require a supermajority vote or a unanimous vote of the other owners, or maybe just a simple majority vote. And that will all, however you want to do it, this is where you would detail all those things. And then down here, management, this is what I was talking about earlier. This is going to describe either you're going to have a separate manager, which may or may not be an owner, or you may have one of the members that's going to be the managing member, or maybe a committee if you have a whole lot of members. And then that's going to detail the authorities, how votes are going to be done, what specific authority each member has and retains, and which is transferred to the manager. And this is where you want to be really specific in the real world to detail out, who's going to have banking authority, check writing authority, who's going to maintain the books, that kind of thing. Here we talk about minutes and meeting and keeping minutes. And you can just kind of look through this and see the different type of issues that you want to detail out. Okay, member meetings, notice, very important. If you're going to have a meeting, you have to provide notice. If you don't provide proper notice, any decisions out of that meeting may not be legally enforceable if you have a dissenting member, and a court can overturn those actions. What happens if you want to have a meeting without, you don't want to have a physical meeting? Can you do it by email, by Zoom, by telephone, which is really common nowadays? Are you going to be a fiscal year or a calendar year taxpayer? Just all of those kind of things are detailed out. And then what happens when somebody dies, or they get divorced, or they file bankruptcy? You may want to have a forced purchase plan, which I have set forth here. How are you going to value, if somebody dies, you want to pay off their family and buy them out? How are you going to value that? Oftentimes we'll have life insurance that might be included to help fund the purchase of the deceased member's share. Or if they get divorced, you may not want to be in business with their ex-spouse, right? Especially if it's a family-run business. So you want to have details there that require, in a dissolution of marriage, a divorce, that the spouse has to sell the share back to the LLC. That way you don't end up in business with, actually happened, a friend of mine from high school went into business with his brother-in-law, married to his sister, right? Well, of course they get divorced, so now he's in business with his ex-brother-in-law, and they hate each other. I mean, it's not good. They were able to work it out. He ended up buying the other one out, but it's good to have that kind of language in there in case you can't agree. Expulsion of a member over here. This allows for involuntary kicking someone out, so to speak. Now, when would you want to do that? Well, what if they got convicted of a crime and they're now in prison? You don't really want to be in business with them. Or they do something that's detrimental to the LLC, like they steal money from the company. I actually had that case once. And so you want the ability for those kind of things, if they occur, to be able to force somebody out, expel them. Now, you typically will have to pay them. But, if they've been stealing money from the company, that's going to offset what you would owe them for the value of their share, right? Or if they've committed a crime, those kind of things. So, again, in the real world, you're going to custom make this for your own form of business. I've included in Article 10 an arbitration clause. And I'll just talk about that real quick. Arbitration is a non-judicial form of settlement. So the arbitrator is like a judge, but it's done privately. So instead of going to court, you're going to keep it private. The arbitrator would be hired, cost split, and then the arbitrator would make a decision rather than having to go through court. Mediation is another common paragraph, which is facilitated negotiation. Very helpful, especially in a family business. If you get into a dispute with your siblings over running the business, you don't really want to sue them. And so you can bring in a third-party mediator, acts like a counselor, and help work out the issues. So that's real common in small and family business. All right, since I'm close to it here, on page 52, I'm going to switch gears. For corporation, you're going to have bylaws. So bylaws are like the operating agreement, only for a corporation. So if you're going to be an S Corp or a C Corp, you're going to do bylaws. And again, they are the foundational document for the corporation. And they're going to set forth how you're going to do meetings of the shareholders, what rights the shareholders have to vote. The board of directors, how many people will be on the board of directors, if there have to be qualifications for the members of the board. Maybe they have to have a degree, or they have to have expertise in an area, maybe accounting or marketing or whatever. Maybe they have to be a family member if it's a family-run business. And that's where you would put restrictions on board member, eligibility, that kind of thing. You'll notice here it says that the number of the board of directors will be at least 3 people. But what happens if it's only you? One person corporation. That's what I'm an S Corp in my law practice. Well, in that case, the number of the board of directors will be 3 unless shares of the corporation are held by fewer than 3, and then it will be the number of directors equal to the number of shareholders. So if you only have one owner, you only have one member on the board of directors, right? So that's what that language says. Okay, the bylaws will also set forth the officers of the corporation. And in this particular example form that I've given you, this is the most common, in Oregon at least, is the officers will be a president, a vice president, a secretary, and a treasurer. Under Oregon corporate law, you have to have a president, a secretary, and a treasurer. Now, you can have other types of officers if you want in a corporation, and this is really common. So you may want to have different levels. So maybe you want to have higher level officers and lower level officers. So higher level officers might be like a chief executive officer, CEO, chief financial officer, CFO, chief technology officer, chief operational, chief legal officer, chief marketing, whatever. And then you want to have maybe lower level, president, vice president, etc. Or perhaps you want to have, instead of 2 levels, you want to have 1 level of officers, but you want to have multiple different vice presidents. So we have the vice president of marketing, vice president of operations, vice president of engineering, vice president of whatever your business is. Now that's up to you. Oftentimes that's done for various reasons. Number one, you might want to do it for marketing so that you can have either an employee or an owner as an officer, and they can have a business card now that says I'm a vice president. Or it may be because you want to, for payroll, you want to have different pay schedules depending on if you're an employee and an officer or not. So those are all individual business decisions. But depending on how you want to structure that, that all needs to be detailed out in the bylaws. And you want to detail who has authority. So back to the CEO, president kind of level. That's real common in small family-run businesses. I can think of one client I have. The business was started by the parents. They are now on their way to retirement. They don't want to be involved in day-to-day stuff at all. They want to be involved. They're going to be on the board of directors still. They're still shareholders and owners. But they want to transition out of the day-to-day stuff because they want to travel and everything else, right? So they created, the dad used to be the president, and the mom was the vice president, secretary, and treasurer. So now they're going to create CEO. The dad's going to be the CEO, and the daughter is going to be the president. Mom is basically going to be, I think they're going to call her chief operations officer. And then they have some other children that are going to be other officers, and they have some grandchildren that are going to be in there too. So now they have 2 levels. So basically the CEO has authority to veto decisions of the president, so the maintaining some control. And so it's just kind of a family structure, but again, they had to amend their bylaws to be able to do that. So I just tell you about that because just because when I put here, this can be modified, but it's very important that if you do that, you make sure that the documents reflect what authority each has, so that way you don't have conflicts. You want to make it very clear if the CEO has override authority, that kind of thing. Okay, so back to our list of documents here. I think I talked about SS4 and tax ID numbers last time, so I'm not going to go over that again. But again, you're going to need that for either an LLC, corporation, or partnership. Did I talk about assumed business names? Did I talk about doing this situation with assumed business names? This kind of thing? I don't know what I did I? I don't think I did. Okay. So just to remind you, an assumed business name, an ABN, is when you're doing business in other than your legal name. So that's pretty straightforward. If you're a person, if you're not doing business in your name as a person or a derivative of your name, then you have to have, when you file the LLC or the corporation, you can have a different name, of course. But if you want to use a different name for business activities, you have to file an assumed business name. An assumed business name can also be filed by a corporation, an LLC, a partnership, a nonprofit, any other type of entity. It's not just individual to a person. And this is a really common method, again, in business for compartmentalization. Now, an assumed business name is purely a name. It is not a separate organization like an LLC. So the use of an assumed business name does not provide this compartmentalization of liability. But there are other uses for having multiple assumed business names, which are very similar to this example I gave you here. So now, for example, let's say that instead of, I don't want to be LLC, I don't want to have a separate LLC, because I don't want to pay the filing fees, and I just want to keep it simple. But I want to have different restaurant locations, so I have a different assumed business name for each location. So, maybe Hasbrook Hamburgers of Eugene as an assumed business name tied back to my S corporation. Hasbrook Hamburgers of Salem, Oregon, Hasbrook Hamburgers of Monmouth, Oregon. You get the idea. You see this a lot, and I use restaurants because you see this a lot with franchise locations like Subway, Taco Bell, etc. Those are usually privately owned, and then they have franchise rights from the parent corporation, Taco Bell or whatever. But they'll set up a corporation, and then each will be either a separate LLC or perhaps just a separate assumed business name. Now there's another reason why you might want to have multiple assumed business names. One of those has to do with developing trademark and copyright. So if you have a product or a brand that you want to build up, and you want to protect those rights under copyright and trademark law, then one of the ways that you can prove that you have rights to that name is by filing the assumed business name. Because when you file that, it becomes public record. It also creates a date in the public record of when you use that name in the stream of commerce. And under trademark and copyright law, which we'll talk about in a different class, that date, when it's first used in business, establishes who has first rights to the name. And so that's a real common way. So if I want to establish a brand name, Super Creamy Frozen Yogurt or whatever, then I file that assumed business name, Super Creamy Frozen Yogurt, and I tie it back to my corporation. So that's another way that you might want to use an assumed business name. Now there's another reason for an assumed business name and having maybe multiple of them, and that is if you want to not only build up that brand name for copyright and trademark protection, but eventually, let's say I'm building up the name of a business, and eventually I want to sell it. So maybe I'm coming up with a whole different, a restaurant, which eventually I'm going to have a chain. And eventually my goal is I'm going to build up this chain, well, it's well enough known, and then I'm going to sell the whole package. And so I want to develop that brand name, but I also want to be able to sell that name in the future, including all the different locations. So I don't want my corporate name to be the same as the brand name, because when I go to sell the brand and all of the assets, copyrights, trademarks, recipes, I would then have to change my corporate name to be able to free the name up. And so it's real common that you have a corporation, XYZ Corporation, and then I'll register an assumed business name, Hasbrook's Hamburgers, to the corporation. And then when I go to sell that in the future, I can sell that name along with all the business and equipment and accounts and everything else as a package. And then it's really simple. All I have to do is change the registered owner with the Oregon Secretary of State for that assumed business name, and that transfers over to the buyer. So there are various reasons where assumed business names can be very beneficial. Let me show you one final one. I may have talked about this already, but I can't remember. If I did, just remind me. Okay, so when you start a corporation or an LLC, the name of the business must include corporation, company, incorporated, or limited, or an abbreviation, right? So if I'm going to have Hasbrook's Hamburgers, and I'm going to be an S Corp, Hasbrook Hamburgers Incorporated, all right? Now, when I put my sign on the front of my restaurant, I have a menu, I have a website, I go on Yelp and all that stuff. Hasbrook Hamburgers Incorporated is not very visually nor, it doesn't really make you want to eat a hamburger if it's incorporated. It's just not, from a marketing standpoint, it's kind of icky for a restaurant, as opposed to just Hasbrook's Hamburgers, right? So if I don't want to use Inc. or corporation or whatever in my marketing materials, then I can register the name simply Hasbrook's Hamburgers. And that way I can use the name without incorporated at the end on all of my marketing, my website, my menu, my storefront sign, and it's a lot more palatable than, Hasbrook Hamburgers Incorporated. I mean, who wants to buy a corporate hamburger? So you get the idea, right? So there's some marketing components to using assumed business names above and beyond just what I've talked about from another standpoint. Another little assumed business name tidbit. If you're a sole proprietor, you register an assumed business name, you later want to convert to a corporation, you don't have to change all your signs. Maybe you've got on the side of your delivery vehicles the name of your business, but it doesn't say corporation. All of your letterhead, all of your websites. If you incorporate, you're going to have to change all those to include the corporate name. Well, have the same name, but have it be an assumed business name back to your corporation, and you don't have to change all your marketing materials. So there are a lot of different reasons for assumed business names. You can get very creative with it. Kind of went off topic a little bit, but you get the idea. All right. So let's talk about this next form here. Did I talk about the Oregon ID number yet in this class? I apologize. Sometimes I forget what I've talked about from one term to the next. Let's talk about that. So page 32. This is the Oregon Combined Employers Registration Form to get an Oregon Business Identification Number, an Oregon BIN. And this would be true for both a corporation and an LLC. If you're going to have employees in Oregon, you have to have both a federal tax number, and you have to have an Oregon business identification number. If you're not going to have employees, you don't have to. You only have to have the federal number. But if you have employees, you have to fill out this form and submit it to the state of Oregon to get an Oregon ID number. So for you guys, I would like you to go ahead and fill this form out with your project no matter what. Even if you don't plan on having employees, I just want you to fill this out so you kind of see what it looks like as part of the ordering process. But it's much more detailed than the federal form. And so you go through and you can fill this out. Again, I don't want your personal information, but just fill it out as best you can. But you can see it's a lot more detailed. It has all these different organizational structures. If you're going to have agricultural versus fishing, domestic, the payroll is different for them. Are you going to be an Oregon quarterly filer? And I'll talk about what that means later. If you have Washington or domestic, you file differently. Number of employees, when are you going to first pay the employees? Are you in TriMet or Lane County? If you're in either the TriMet area up in Portland or down in Eugene area, you have to pay an additional tax to the public transportation district. Unemployment tax, workers' comp. If you're going to have off-site payroll, you have to advise the state who your payroll company is, and then they have to do a power of attorney form. So it's a lot more detailed. And then you file this with the state of Oregon Employment Department down here. So you'd fax that into them is what I do. I fax it. I have an e-fax, of course. That way I have a record that it got sent. So for this class, I would like you to do this form no matter what. Even if in the real world you're not going to have employees, but that way you're kind of aware of it, you learn what you need to do. All right. So for corporations, There's a few additional forms I want you to do. Bylaws, and then we have minutes of the first meeting of the Board of Directors, which is on page 58. And I have a few minutes to go through that real quick. So minutes of the first meeting of the Board of Directors. So you're just starting your corporation, you now have a Board of Directors, you have to have a meeting. Now in the real world for small business, this is done on paper. In a bigger business, you would have an actual physical meeting, either live or by Zoom. But you have to keep minutes every time the Board of Directors has a meeting. The law requires that you keep minutes of some type. And the first meeting is very important because this is where you're going to establish all the ground rules. So if you look through here, and this is just, in the real world, you may have a whole lot of different information in here. But first of all, you have a meeting, when was it held, where was it held, who was present, articles of incorporation were filed with the Secretary of State, and then the first order of business for this corporation is they want to be an S Corp, so they don't have to pay corporate tax. So this is a resolution that authorizes the corporation to be treated as an S corporation for the IRS and to file the Form 2553, which I'll talk about, it'll probably be next time. And then if you go on, you can just kind of see the other type of resolutions. A resolution is authority for the officers to do something. It's a written approval from the corporation. And banks, title companies, lending companies, other type of entities will require written resolutions that authorize a president, a vice president, treasurer, secretary, or other officers to do things like open a checking account. You have to have a corporate resolution. So these are some standard initial resolutions. Issuing shares of stock. Who will be the purchasers of the shares of stock? How much per share are they going to pay? The stock will be a private placement, in other words, not publicly traded and not registered with the SEC, Securities Exchange Commission. Who are going to be the officers? They have to be elected and appointed by the Board of Directors. So that's where you're going to put them. What bank you're going to be using, who will have authority to sign. These are all standard resolutions that you adopt when you first start a corporation. What else do I have in here? Reimbursement for use of a private automobile for mileage. If you're going to have a loan, authorization for getting a loan, for leasing a property, for issuance of credit cards. So these are all just sort of standard resolutions that are going to go into the minutes of the first Board of Director meeting, and then the bank will ask for a copy of that to show that you have authority to enter the check, open the checking account, get a corporate credit card, get a business loan, or whatever. So I give you an example of that. Again, I have those in Word format on our Canvas page, or you can just use this one. But I do want you to include that. If you're going to be a corporation in your project, make sure you put those minutes in there. And if you want to type up additional ones, that's up to you. Okay, I am out of time, so we will break there.